The SEC approved spot Ethereum ETFs. One nonprofit is fighting back to protect consumer privacy, and Congress says no to CBDCs. These stories and more on this week's Bitcoin News Update. Hi, I'm Nate Martin with this week's Bitcoin News Update. On Thursday, the SEC approved 8 applications for spot Ethereum ETFs. Ethereum's price surged by 18% on Tuesday, driven by speculation that approvals had become more likely than not when regulators asked NASDAQ, the CBOE, and New York Stock Exchange to revise their applications. It seems that only one obstacle stood in the way for approvals, as Fidelity, Franklin Templeton, Invesco Galaxy, BlackRock, Bitwise, VanEck, and ARK21 shares removed Ethereum staking provisions from their applications prior to the announcement. While the SEC approved the 19B4 forms for Ethereum ETFs from BlackRock, Fidelity, and Grayscale, their S1 registration statements still need to become effective for trading to begin. When Bitcoin ETFs were approved, the S1 forms were ready before the 19B4 approvals, allowing trading to start the following day. But for the Ethereum ETFs, the SEC only began engaging with issuers earlier this week. A source close to the process indicated that the S1 forms still need a lot of work, and that could take weeks. Galaxy Digital forecasts that spot Ethereum ETFs will be listed on exchanges by July or August, noting that their higher risk profiles when compared to Bitcoin ETFs could delay regulatory decisions. A recent Bernstein report suggests that the approval of spot Ethereum ETFs in the U.S. sets a precedent for classifying Solana as a commodity. Now that Ethereum ETFs are approved, it marks the first non-Bitcoin crypto to be classified as a commodity, raising expectations for Solana, which crypto investor Brian Kelly speculates may be next for ETF approval, given its potential and the evolving regulatory landscape. The Bitcoin Policy Institute, a nonprofit which supports Bitcoin initiatives, has launched the Peer-to-Peer Rights Fund to protect Bitcoin's decentralized and permissionless nature from regulatory overreach. Its first objective is defending Samourai wallet founders Kian Rodriguez and William Lonergan Hill, who were indicted for operating an unlicensed money services business. Co-founder David Zell emphasizes that peer-to-peer transactions using decentralized tools are under regulatory attack, as highlighted by recent legal cases such as Tornado Cash and Uniswap. The fund aims to secure crucial legal precedents to keep non-custodial privacy tools out of the reach of Bank Secrecy Act jurisdiction. The U.S. House of Representatives has passed the CBDC Anti-Surveillance State Act with a vote of 216 to 192, mostly along party lines, with unanimous Republican support and only 3 Democrats in favor. The bill seeks to prevent the Federal Reserve from creating and using a central bank digital currency to offer services or issue digital currency directly to individuals. It would also enforce strict boundaries regarding surveillance or monitoring features akin to those being tested with China's digital yuan. Financial Services Committee Chairman Patrick McHenry emphasized the bill's role in protecting Americans' financial privacy, stating that, quote, "Such surveillance has no place in the United States. The bill must pass the Senate and be signed by the President to become law." Tuesday marked the 14th anniversary of the first Bitcoin transaction for real-world goods, when on May 22nd of 2010, Laszlo Hanyecz bought 2 Papa John's pizzas for 10,000 Bitcoins. At today's exchange rate, the price for the family dinner comes out to nearly $700 million. That's it for this week's Bitcoin News Update. If you'd like to support what we do here at the Bitcoin Effect, maybe you'd like to buy me a coffee. Just scan this QR code or click the link in the description to help support the channel. We really appreciate it. And to help us reach more people here on YouTube, don't forget to click the like button, subscribe to the channel, and turn on notifications so you'll know as soon as we post a new video. See you next week.